one of the bigger Nifty companies, or the biggest Nifty companies, all set to declare earnings today. Reliance Industries, revenue expected to fall by around 7.5%, with the biggest savior for the company being the telecom sector, is what analysts are penciling in. Swami joins us with all the details on what we can expect. Swami.
Well, a muted set of numbers are expected from Reliance Industries in the first quarter of FY26. Revenues are expected to be down by nearly 7.5%. EBITDA could increase by around 1.5%. Margins are expected to come in at 18.4%, while the net profit, that is expected to be high by around 2% on a sequential basis. Now, if you look at the segment-wise data, the retail segment, which contributes the most to its SOTP target price, that there the revenues are expected to be down by 4%, while the EBITDA is expected to be down by around 1%. However, on a YOY basis, the numbers are expected to grow on the back of the store additions and higher footfalls that Reliance Industries has seen in the first quarter of FY26. Now, if you look at the O2C segment EBITDA, that is expected to be higher by around 2% on a sequential basis. Now, largely the Singapore gross refining margin, that averaged around 77% higher, and this is the sole reason why the O2C business is expected to report a good set of numbers, because these positives are largely offset by a maintenance shutdown that happened in the first quarter, and also the petrochemical margins were weakish in the first quarter. So these two negative factors had largely offset the higher GRMs that we had seen in the first quarter of FY26. Now, if you look at the oil and gas exploration EBITDA, that is expected to be down by around 4% on a sequential basis, largely on the back of lower production number and lower volumes that we had seen in the first quarter. Now, if you look at Reliance Jio, that is the telecom arm of Reliance Industries, that is expected to report a solid growth. In fact, the highest growth compared to other segments of Reliance Industries in the first quarter of FY26. Revenues are expected to be higher by largely around 3%. EBITDA is expected to be higher by nearly 4%. Margins are expected to come in at 53.3%, while net profit is expected to be largely flat at close to 6,700 crore. The ARPU number, that is the key number for a telecom company, that is expected to be high by around 1% at close to 208 rupees, while the subscriber number is expected to come in at close to 49.75 crore. Now, the numbers are seeing a growth largely on the back of the tariff hike that company had done nearly 4 quarters back, and also because of subscriber addition that we have been seeing for Reliance Industries. In fact, this is the 4th consecutive quarter where we will see a growth in the company's ARPU on a sequential basis. Now, the key things to watch from Reliance Industries earning will be their management outlook where it comes to the refinery and the petrochemical business. What is the commentary coming in for the new energy business? What is the commentary coming in for ARPUs and tariff hike that is expected even going forward? And how has been the growth when it comes to Jio Fiber, and what is the capital expenditure plan will be important to track from Reliance Industries earnings.
Okay, thank you for that very detailed breakdown of what we can expect. But joining us now, Prabal Sen, Senior Research Analyst covering Indian oil and gas and part of ICICI Securities. Welcome, Prabal. Let me start off by asking you, what are the key numbers you're looking out for? Swami clearly seems to believe that telecom will be center stage when it comes to the Q1 FY26 numbers. Are you of the same view?
Yeah, I think Somit pretty much covered whatever I had to say, so I don't have much to add. I think he pretty much explained all the details that are there, but I think in the OTC segment, I think it's going to be interesting to look at how much the numbers actually improve on a QOQ or on a YOY level. I think Somit did mention the fact that there was a shutdown, and a shutdown impacts not only the throughput but also the product yield for that quarter. Otherwise, you would have probably seen an even stronger number. If you just take a look at how GRMs have behaved and the fact that Petchem is broadly flattish, if not slightly better, this number would have been stronger if not for the shutdown. Telecom, you're absolutely right. Our telecom analyst, I think, had put out a note a few weeks earlier as well, highlighting that Reliance is gaining ground in BWA, enterprise and fiber, ahead of their rivals, if my memory serves. And therefore, the improvement that we're seeing should actually gain a lot of momentum. If I look at his estimates, almost the entirety of EBITDA growth over FY27 and 28 is frankly being driven for Reliance from the telecom segment, built on an expectation of improving ARPUs, recapture of subs in mobility, as well as a growth in the enterprise and fiber space. So to that extent, I think telecom definitely will be one to watch. Retail is, I think, something that we would also watch with some interest. If you look at the trends, the last 2 quarters actually have seen a little bit of a recovery in retail momentum. Before that, we did have a couple of quarters where growth seemed to be slowing down. There was a lot more closures of physical stores where they were probably cleaning up some of their offline, presence, and basically optimizing their inventory. To that extent, I think the slowdown is something that had impacted numbers. That seems to be getting covered, and now again, even in retail, we are expecting that momentum should come back. So to that extent, I think this quarter should be a good indicator of what to look forward to for the next 12 to 18 months from both these high growth segments. OTC, as always, remains cyclical, and frankly, it's extremely uncertain at this point of time which way GRMs and Petchem will move. But this quarter definitely will be better from a YOY perspective.
Yes, you've also covered plenty, Probal, so tough to kind of question that, but give us a perspective. If there was one pocket which could surprise on the upside or which could prove to be a dampener, what would that be? What is it that you feel in your gut that could be a positive or a negative, on either side?
No, I think, as has been the case over the last few years, retail and telecom are the sectors that people look at in terms of, and of course, the capex number as well as the cash flow number. I think that is something that should increasingly come under focus as we move to probably a situation where a lot of the capex on the telecom sector is now behind us, and it's basically new energy capex. That's the only high cap should actually start to see a little bit of a decline, ideally speaking, improving the FCF yields, improving the return ratios. So I think not just this quarter, but over the next few quarters, capex numbers, net debt numbers are something that at least I would definitely want to look at, because that has been our one concern or one slight, skepticism in terms of valuations, where we have not really seen FCF yield conversions and return ratio improvement to the extent that we would like. But earnings growth, I think, definitely led by retail and telecom. So I think metrics on those two segments will be the ones to watch out for.
Excellent. Thank you, Probal, for rounding that up. Cash flow is the other piece, absolutely spot on. Something that, of course, we'll have to keep our eye out on as the numbers come out later today evening. Thanks so much, Probal, for joining us this afternoon, giving us that perspective.